Very good evening to you all. Aiboan, Malay Vanakkam, Assalamu alaikum. So we would like to warmly welcome you all for the yet another inauguration of finance for non-finance professionals. It's our privilege to welcome you all for this particular startup session of finance for non-financial professionals, batch 4. So welcome to Columbus School of Business Management, and would like to warmly welcome once again. So today's free opening session will give you an idea of what we have planned for you. And for your development, and our guest speaker will explain why we should be conversed in the principles and practices of managing financial resources. We are to achieve goals, which is a significant value in this modern management domain under challenging context. You all agree with me. From there on, I will take you through the structure of the program, and you can expect in the weeks to come. We'll be starting the program for next week, Tuesday onwards. First of all, let me talk a little bit about the program. It has been designed to add value to corporates, employees who work in the corporate sector, and management and entrepreneurs, and the business owners who are the next generation of business leaders. We try our level best to bring the business academic quality and the practical aspect in order to deliver a program that will add value to your career as well as your personal development as well. In achieving these objectives, we have secured the support of few extraordinary intellectual and inspiring corporate leaders in the industry to collaborate with us to give you the best possible outcome from our online platform during these challenging times. So that's our responsibility as a social enterprise or responsible institute of business school. Just give you a brief about the Columbus School of Business Management, which established 6 years ago, was a result of a successful integration between the academic sector and the corporate sector of Sri Lanka. The school was the brainchild of leader in the academic spearhead, Professor Bandara, and giant in the corporate world, Mr. Diane Gomez. You must be knowing very well, and he's one of the key persons. It was their vision to build the leaders that can successfully maneuver and navigate the corporate world and achieve success. They believe that this can be achieved through the power of learning, and this is what we constantly strive for, to provide quality learning and diverse exposure to Sri Lankan population that will help them succeed in the business world. We are not in the business of issuing piece of paper. We are in the business of helping Sri Lanka continuously improve. We engage those who have succeeded in the corporate world to create a platform for our students to interact and learn. So therefore, we focus heavily our resource personnel, the tools that will help shape Sri Lanka's future. A few examples, or rather some of the people that have contributed to our programs include titans such as Professor W. Lakshman, former Central Bank Governor, Dr. Lalit Veeratunga, Mr. Vegapitiya General Ratnayaka, and also Dr. Ajit Kolone, SDIG, Rohana, Mahela Jawada, Bhati Santush, and all those individuals who have gone to the top of the domain as well. So we work with these individuals and design customized programs that are current and relevant to our market. This is why we are selective in linking with foreign universities. We do not believe in the one program fit all concept. Instead, we want to have programs that cater to our country, our market, our needs at the time. Our affiliated universities, University of India, Cumbria University in UK, and Pearson in UK allow us to customize our programs whilst ensuring high standard and recognition. So we hope that this journey that you are about to embark on will give you the opportunity to enhance your knowledge and sharpen your skills, learn from those who have succeeded. We hope it will give you the strength and the required tools to set or get one step closer to success We offer a wide range of programs in corporate training, public sector development, which include the mini MBA we call Executive Management Development Program, Science of HR for non-HR professionals, academic and academic program related to business management, sports science fitness, mental health, psychology and counseling, international trade management as professional qualification for export and import sector, and also top-up degree for psychology and counseling as well. And if ever you are interested and would like to find out more information, please feel free to speak to our young dynamic coordination team to obtain any details you require regarding the program. So we wish you all the very best in all your future endeavors and hope you will continue to make and CSBM your learning partner in future as well. So that's a little bit about actually our business school, which is the business school in Sri Lanka, which is located in Colombo and Ward Place. Okay, let me actually a little bit talk about our guest speaker or resource person tonight, who's going to address you all on this particular program called Finance for Non-Financial Profits Batch 4. He's a part of our lecture panel as well, very versatile lecturer, and he's none other than Mr. Nalin De Silva, and holding FCA, ACMA, MBA, and FMAAT, and also senior chartered accountant with more than 21 years experience in Sri Lanka, well as overseas, lot of experience in other domains as well. And also he's a current president of AAT Sri Lanka, which is a very prominent organization, AAT Sri Lanka, and former head of corporate planning, now local construction company private limited, and also partner SCB corporate. And also he's a director corporate doctors private limited, and also he's a visiting lecturer at Colombo School of Business and Management. And also if I touch a little bit of his academic enhancement of qualification, Master of Business Administration, Postgraduate Institute of Management, University of Sri Lanka, and fellow member of the Institute of Chartered Accountant of Sri Lanka, associate member of the Institute of Certified Management Accountants of Sri Lanka as well, and fellow member of the Association of Accounting Technicians of Sri Lanka. And also I would like to highlight a few areas where he having a specialization apart from his domain as a accountant: the strategic planning, system development and business restructuring, financial control, project coordination and administration, and also treasury management as well. So this is my privilege to warmly welcome Mr. Nalin De Silva to address our audience who are here tonight to learn finance from CSBM. So over to you, Mr. Nalin De Silva. Thank you so much. I do understand you are extremely busy, tight schedule with many things, actually your new profile as well as a president of AAT Sri Lanka as well. And appreciate your presence on behalf of our members who are here to go through your program, go through our program as well. Over to you, sir. Thank you.
Good evening. Thank you very much, Pugudu, for your wonderful introduction about myself. Also, I would like to start at mention at the outset, I'd like to thank you very much on the management of Colombo School of Business Management for giving me this opportunity to address the program of professional finance or non-financial professionals. So good evening, all the participants again. So we'll start the session.
Good evening.
Share my screen with you, right?
Good evening, sir.
Good evening, right?
Good evening, sir.
Good evening. Hope you all can see the screen.
Good evening, sir.
Good evening. Good evening.
Hope you can see the screen now, right?
Yes, sir, we can see.
All right, good. So today's Learn Finance with Colombo School of Business Management. So welcome to the session. We'll start now. You must be wondering what I have done here at the beginning, right? Sharing the batting details of one of the greatest batsmen in the history, Virat Kohli. Right? So looking at his Test, ODI and T20 performance. In Test matches, he has scored 8,000 or 8,000 runs. In ODIs, he has played 262 ODIs, scored more than 12,000 runs. T20s, he has played 99 matches and scored more than 3,000 runs. If you're looking at his average, in test, his average is 49 point, almost 50. In your ODIs, it is 57. When it comes to T20, it is 50. So by looking at his performance, what you can say? What we can say? We can say he has done very well. How do we say? By looking at statistics, by looking at how he has performed when he was playing all these three formats, right? So a performance of a batsman, we analyze, we identify by looking at the statistics. What is his average? What is the strike rate? How many centuries he has scored, right? So we know if he's as a batsman, if your average is above 50, you are a very good batsman. So by looking at performance of Virat Kohli, we can identify him as one of the greatest batsmen. Right. Now we'll move into another cricketer. He's also a batsman named Martin Guptill. He's present in New Zealand. Now look at his performance. He has played 47 test matches. His average total runs 2,500. His average in 29. He has played 196 one-day matches, 7,000 plus runs. His average is 42. He has played 121 T20s, scored more than 3,000 runs. His average is 31.79. But he is also one of the good batsmen in today's context. But now we realize we can compare these two. How Virat Kohli has performed, how Martin Guptill has performed. When you're looking at these two, we can understand, we can realize Virat Kohli has done better than Martin Guptill. Because when looking at his average, looking at the strike rate, even looking at the number of centuries he has scored, right? So we can get an opinion, we can give an opinion that Virat Kohli has batted well than Martin Guptill. So in terms of cricket, we look at the statistics of each player and we evaluate his performance. You can evaluate individual player, then you can compare with other players. So you can look at how he has performed recently also. If you look at Virat Kohli, he's one of the greatest, but he has not scored a century almost for a period of 3 years in any format. So he's having a bit of a difficult period. So by looking at this, we have evaluated, since we know cricket, we can analyze the performance of a batsman by looking at the statistics. Right? This is how we do it at cricket. How we are going to do it at a business. How to evaluate the performance of a business. So evaluate by looking at the financial statements of the business. You can evaluate a business by looking at the financial statements of the business, mainly. So you can look at the current year's financials as well as previous year's financials. By looking at financials, you can evaluate the performance of the business, right? So before going into details, we see what are the components of financial statements. What are the financial statements, the components? Number one, statement of comprehensive income. In other words, we used to call it profit and loss statement, short term P&L. Now we use it. Now the term we use it is the statement of comprehensive income for the P&L. Number two, statement of financial position. We used to call it balance sheet. Number three, statement of changes in equity, statement of cash flows. Next, accounting policies and notes to the financial statements. We'll discuss about these things, these components, a bit later, right? All right. Then we need to know about how is the finance for non-financial professionals, right? So we need to know first what is financial accounting, right? What is financial accounting? Financial accounting is the simplest interpretation of a business transactions in a common language that can be identified by everyone. Right? So you know, in an organization, they do number of transactions, 100 transactions, millions of transactions, right? So financial accounting is the simplest interpretation of business transaction in a common language that can be identified by everyone. Therefore, all stakeholders should familiarize with the business language called financial accounting. So, you know, in a business, there are different types of stakeholders. You are the owners of the organization, shareholders, the managers, other employees, your creditors, so all are stakeholders. Generally, stakeholders should know about the financial performance of the organization. Evaluate financial performance by looking at the financial statements. Financial statements are prepared by the accountants or the finance manager and the team, right? So what is accounting means? So they prepare financial statement through a process. So what is accounting? Accounting is the entire process of providing economic information of an accounting entity for decision making to the stakeholders. So it's a process. Accounting is a process of provide economic information of an accounting entity. Accounting entity means an organization or a company for decision making to the stakeholders. It means accounting, through accounting, it's a process. We provide information to take decisions. Right? So we said accounting, I said accounting is a process. You know, in a process, we have three things. You have inputs, you have a process, then you have output. So in an organization, what is inputs? The transaction taken place. Right? So look at whatever the organization, you know, when they are doing transactions, what are the transactions? Maybe selling of their goods, maybe purchasing of the materials they want, maybe settling payment of salaries to the staff members, settling due bills, obtaining bank loans, settling creditors. So all these transactions are the inputs to the accounting process. So how do you going to process this input? So when this transaction take place, you go to collect the details of the transactions. It may be manually or maybe system generated. So once you collect this, you go to record it. You go to classify it. What do you mean by classify? When you are recording, say sales, you have to classify all the sales invoices under sales, all the purchases under purchases. So go to classify according to the heading, salaries under salaries and wages. Right? So after classifying, you go to summarize all these things. You go to the total figure. Right? Then you have to analyze and interpret the outcome that you go to communicate to the stakeholders. Right? So the output you are communicating in the form of financial statements. Financial statement is the output of this accounting process. So by looking at financial statements, stakeholders take decisions. So the accounting is the process of providing information to the stakeholders to take effective decisions. if you don't have financial statements, you can't take decisions. You can take decisions, you can take effective decisions. Your decisions may be wrong, but if you take decisions based on the financial statements, you know how the organization has performed. So then looking at that, you can take decisions how you are going to move forward. Right? So the process, the financial accounting has process, it's a process, it has its own inputs, there's a process and output. So financial statements is the output of the process. Right, now I told you at the beginning, there are 5 components in the financial statements. As non-financial professionals, you need to have an understanding of these statements. You don't have to be accountants, you don't have to be finance managers, but you need to have a basic understanding of these things. You need to be in a position to read these statements and understand it. Then you can get a better understanding of the organization. You can ask the right question, right? You can actively and effectively participate in decision-making process, right? So, as employees of organizations, you may have limitations of looking at the financials of the other organizations. You may be able to look into financial statements of your own organization, but you may have limitations of looking into financial statements of other organizations. How you are going to look into the finance? How you going to know the financial position of other organizations? You know, we have Colombo Stock Exchange. There's a website called CSC, Colombo Stock Exchange, csc.lk. So log into that one. It has all the financial information of the listed entities in this country. Basically, top organizations. Look at Haley's Group, look at any bank, commercial bank, Sampath Bank, John Keys. All the financial statements of these organizations are listed, are in the website of the Colombo Stock Exchange. You log into Colombo Stock Exchange and you can see the financials of all these organizations. You can see components of the financial statement. You can see the history of the performance, how they have done last 5 years period of time, how they have done last 10 years period of time. All the information is there under each company. So if you need to learn other than your organization, if you have a limitation of access to other organizations, you log into Colombo Stock Exchange and it's freely available for anyone to look at the financial statements, because investors, they invest in an organization by looking at the financial statements. Therefore, the listed entities, otherwise public listed companies, PLCs, are publishing their accounts in the Colombo Stock Exchange. That is for the interest of the investors or any other party. So have a look, then you can get an understanding of the financial statements of many organizations in the country, many industries, right? Right. Now let's look at what is the statement of comprehensive income, in short form P&L, profit and loss statement. This statement is prepared to measure the financial performance of an entity or an organization over a period of time. In other words, it's prepared to see whether you have made a profit or loss. Generally, the P&L is prepared for a period of 1 year when you are publishing. But organizations, they prepare financials once a month, quarterly basis, right? So the objective of the company P&L is to measure the financial performance of an entity or the organization. By looking at the P&L, you can see what is your profit, whether you have made a loss, what is your revenue, right? Top line is what is the revenue of your organization. Then what is the cost of services or cost of sales? What is your gross profit, right? And other expenses, administration or establishment, marketing, finance, then you get the net profit. It is prepared for a period. So by looking at the P&L, we can understand for this period, particular 1 year time, we have earned a profit of this amount. This is our revenue. We have earned a revenue of say 100 million. Right? We have earned a profit of 10 million. So statement of comprehensive income is prepared to assess the financial performance of an organization. Number 2, statement of financial position. We call it balance sheet. Why you prepare balance sheet? Balance sheet summarizes the company's assets, liabilities, and owner's equity at a specific point in time. Describes about the financial situation of an entity as of a particular date. Statement of comprehensive income or the P&L we prepare for a period of say 1 year's time. It's for a period. But the balance sheet we prepare for a specific date. As at this date. This is the balance sheet. As at this date, what are the assets? What are the liabilities? What is the owner's equity? So assets we generally have non-current and current assets. So liabilities like same. And owner's equity means how much the owners, the shareholders have in the business. So in the balance sheet, if you take total assets is equal to the total liabilities and the owner's equity. As example, if your total assets of the organization is 100 million, the total of liabilities and owner's equity also equal to 100 million. So have a look at a balance sheet, you could understand. So balance sheet describes you the status of assets, liabilities, and owner's equity of the organization. Next, moving to the statement of cash flows. So cash flows generally describe the movement in cash and cash equivalents during the accounting period as a result of its operating, investing, and financing activities. So again, cash flow is also a period of time. So during say 1st April of 2021 to 31st March of 2022, right? How the movement of cash flows has been taken place as a result of its operating activities. That means your business activities, how the cash flows behave. So your investing activities, right? And your financing activities. So cash flows describes the movement in cash and cash equivalents. Next one is the changes in equity. So we discussed equity means what's owned by the shareholders. Generally, when they invest in an organization, they get shares. So stated capital, what belongs to the shareholder. Not only that, when organization make profits, you distribute a part of the profit among the shareholders as dividends. The rest will remain in the organization. We call it retained earnings. So the shareholders' ownership of the organization, not only the stated capital, but also you need to add the retained earnings also. Right? So in changes in equity, statement of changes in equity, what we look at is the movement in equity position. Movement in equity position due to the transactions during the accounting period. So at the beginning, we can see what is the equity of the shareholders. What is the stated capital, what is the reserves, and retained earnings. So during the transaction, they may earn a profit and they may keep within the organization. That you add into the statement of changes in equity, and then you get the final year-end figure. So it says the movement in equity position. Last one is accounting policies and notes to the financial statements. When you are preparing financial statements, you can't prepare the way you want. There are certain guidelines. In Sri Lanka, the Institute of Chartered Accountants, is the authorized institute to publish accounting standards. They are the sole only organization who can publish accounting standards. So when organization preparing financial statements, we need to comply with the accounting standards. Other than the accounting standards, there are accounting policies. Right? So you got to comply with the accounting policies as well. So accounting policies means in order to emphasize the compliance with the Sri Lanka accounting standard, to show summary of accounting policies that the organization adopted, we are describing in the accounting policies. So note means you are giving the supporting notes to the item described above. That means what we describe in the statement of financial position or the statement comprehensive income, you have to describe notes also will be under the notes to the financial statements, right? So these are the 5 components of the financial statement. The profit term, I want to make a note of it, is an absolute number determined by the amount of income above and beyond the cost a company incurs. In simple language, profit is what is the excess amount of your revenue after you deducting your expenses. Excess amount of revenue after deducting your expenses. That is called profit. All right. Now we look at how we are talking about the budgets, accounts, and how it links with the organization vision, right? And other objectives, right? So, organizations have a vision, most of the organizations. What is a vision? Vision is where the organization wants to go, where the organization is going to achieve, which is mentioned in the vision statement. One day we will be there. One day we want to achieve here. That is in the vision statement, where you want to be. What is in the mission statement is how we are going to go there. So vision statement say we want to be here, or say in a hotel, we can say we want to be the best hotel, right? So that is the vision. So mission statement says how you are going to, what are you going to be the best hotel? Maybe you can say we will maintain our quality of hotel premises. How we are going to train our staff members. How the quality of food we are going to serve our guests. So those are the things, main things that you are going to do will be highlighted in the mission statement to achieve the vision of the organization. So vision says how we are going to go there, where you want to go there. Mission says how we are going to go there. Right? So objectives based on the mission, you highlight the objectives of the organization. Right? As if it is a hotel, how we are going to maintain your rooms, how we are going to ensure the cleanliness of the premises, what is the quality standards you need to have on your food. So these are the objectives. Based on the mission, you prepare the objectives of any organization. So based on that, you prepare strategies. Why you prepare strategies? To achieve the objectives. To achieve the objectives, you need to have strategies. If you want to have staff members who are well qualified, who know how to serve the customers, so what are the strategies you are going to adopt to train your staff members? If you want to maintain the hotel in a very cleanliness way, right? What are the strategies you go to adopt? Right? So how you are going to train your chef and the other team in the kitchen to ensure the supply of quality food to the tourist or the guest? So these are the strategies, right? So based on the strategies, then you prepare your action plan. Vision, you can't achieve overnight. That is something you have to achieve over a period of time, maybe 10 years, maybe 20 years, right? Sometimes maybe 5 years. So based on that, you develop your mission, goals, and the strategies and the action plan, right? You can't prepare action plan for a period of 10 years time, but you divided it into years, right? Based on each year, you have a target that you want to achieve, right? To be the best hotel in 20 years of time. So what you are going to do within the first year, what you are going to do in the second year. So based on these actions, what you are going to do after identified, you have to convert this into a number. That is called a budget, right? So achieve the mission. The first year, these are the things you are going to do. This is going to be our budget. This is going to be our revenue. This is going to be our cost. This is going to be our profitability. So you prepare based on your objectives and the strategies and the actions. You prepare a budget for a particular period of time. That is how the vision and things ultimately link to the numbers, right? So if you can say you want to be the best hotel in the world, but you got to have numbers to see that, to achieve that. You can say then whatever the actions you are taking, you got to see with your expectation, whether you are meeting your expectation. So budget is a document that you prepare, right? Let me explain it a bit. Budget is a quantitative statement for a defined period of time, which may include planned revenues, expenses, assets, liabilities, and cash flows. A budget provides a focus for the organization, aids the coordination of activities, and facilitates control. It's a quantitative statement. It is for a defined period of time, generally 1 year's time. You may split it into 12 months. So you can monitor them, but prepare the budget for a 1 year's period of time. It includes plans your revenue, what you are going to earn, what will be your expenses, the assets, liabilities, and cash flows. So it provides the focus for the organization. So since you are a non-financial professionals, you always look the finance manager, he comes with the budget and he compare the actual with the budget and he report to the management. We have a target of this, but we have achieved this. We are behind the target. Sometimes we have exceeded the target. So when you have a budget in your hand, the finance manager always looking at the budget with the actuals and report to the manager. So as non-financial professionals, you also need to understand the financial statement and the budget. So basic elements of the budget, it should be relevant, measurable, and realistic, right? It has to be relevant to the organization and it has to be measurable, right? And it's to be realistic. You can prepare a budget which is not realistic, then it has no value. So budget basically should be realistic, right? It has to be a comprehensive plan of what entity expect to achieve during the defined period, to achieve the strategies, to achieve the corporate goals, right? Then will lead to mission and vision. So it comprehensive plan to do that, to achieve that, what entity expect to achieve during the defined period. It's a statement complied in terms of money or quantity or both. So budget prepare in terms of basically money. You have quantities as well, right? Budget is prepared and approved prior to the period. Before commencing of the period, you prepare the budget and get the approval. Once budget is approved, it is treated as a working document. I said finance managers, they look at the budget always. It's like a Bible for them, right? They look at the budget and the actuals and they report to the management, right? It also indicates the business policies which have to be followed to achieve the desired objectives. Right? Budget, not only the numbers, there are certain policies also in the budget, subject to amendments if necessary. You know, we could have prepared budget before COVID comes, could have prepared a budget, but with the pandemic, you may have to revise it due to the situation. So it's a working document, but it is subject to amendment if necessary. All right. The next statement that I want to highlight is how you are going to prepare a budget, right? Sorry. Basically, organization, when they are planning for a next year or next period, they start with the sales budget. They start with the sales budget. How much they are going to sell. How much they are going to sell in terms of numbers. So based on the sales target, this is related to a manufacturing environment, sales target, you go to plan your production budget. Based on the sales budget, you go to prepare your production budget. Assume an organization is targeting to sell 100,000 units. So then what is the production budget? maybe 100,000, maybe 90,000. Say you have all these stocks in hand, then you don't have to prepare 100,000. You need closing stock as well. So based on that, you prepare your production budget. It is based on the sales budget. So once you prepare the production budget, you go to prepare the material usage budget. You know, when you produce certain item, you need to have material, raw material X, raw material Y, and other ingredients. So then you need to prepare the material usage budget. Based on the material usage budget, you prepare material purchase budget. When you are going to purchase, you divide it into maybe weeks, months. So then you prepare the material purchase budget. So you might sometimes purchase on credit basis. Sometimes you may purchase on cash basis, right? So looking at the sales budget again, when you prepare the sales budget, you have to prepare your selling and distribution overhead, your administration overhead. So collection of debtors, what is the period when you are collecting? What is the credit period? 30 days, 60 days, like that. So from the other side, when you look at the production budget, you go to look at the direct labor budget. You look at the production overhead, like electricity, other machinery repairs, things like that. And capital expenditure budget also, whether you need to buy new machinery, and also research and developments. So when all these things come into the scene, you look at everything, then you prepare the cash budget based on all the components. Based on that, you prepare your master budget. So that means you prepare the expected forecasted profit and loss statement or comprehensive income statement. That is what thereafter you are going to monitor. So budget is prepared based on the sales target. Sales target is depend on your objectives, goals of the organization. When you achieve the objectives of the goals of the organization, it will ease you all to achieve the organization to decide mission and the vision, right? Okay, now we'll look at a different area. We discuss what is the financial statement, what is the accounting and the process of accounting, right? What is the relationship between the vision, mission, and the financial statement and the budget, right? So now we look at how we are going to evaluate the financial health of the well-being of an organization. So if we look at an individual, we can evaluate the well-being of an individual by looking at his abilities, his cash flow position, right? Asset base, his health condition, right? By looking at that, we could say his well-being. Likewise, an organization, right? How we are going to evaluate the well-being of the financials of the organization is also a business entity is also very important. So you could do, there are many ways of evaluating. You could do looking at the ratios. I'm not going into details here, right? So you can look at the financial ratios, different types of ratios. One of two, look to evaluate the financial health or the well-being of the organization. So one is the liquidity ratios. There are many liquidity ratios. Liquidity ratios is an accounting refers. In accounting refers the ability of the business to meet its short-term liabilities. Liquidity assess your business ability to pay its bills as they fall due. So by looking at, there are different liquidity ratios, right? Current asset ratios, quick asset ratios, right? So these ratios evaluate whether you are in a position to pay your dues when they become due, right? So whether you have ability to generate cash to meet your short-term liabilities. Take an individual, if he is not in a position to settle his bills, to settle over, to look after his kids, when he may not be in a position to pay their tuition fees on time. So means he's weak in liquidity. So same as organizations, we look into liquidity ratios to see the ability of the organization to meet its short-term liabilities. So that is one way of looking at the financial health. So other way is looking at the profitability ratios. Profitability ratios, right? So profitability ratios that determine profit earning ability of the business. Calculate the return on for investors, measures the business performance that ultimately indicates the level of success of your business performance. So Profitability, under profitability ratios, you have gross profit ratio, you have net profit ratio, and other ratios. We look at how the profit earning ability of the business. Now we compare Virat Kohli versus Martin Guptill. Whereas we can compare two business entities doing the same business. We compare the two batsmen. We didn't compare a batsman versus bowler, right? So we compare two batsmen. Likewise, we compare this company with another organization in the same business. So then we get the profitability ratios, right? So in example, a company into manufacturing, we say manufacturing of tiles or bathroom fittings, right? So we can see the profitability of that organization with another organization in the same business, right? So when company X is, they are earning 20% profit, but the other company Y is earning only 5% of profit. And we can see something is wrong at company Y. Because when in the same business, one company makes 20%, why can't the other company? That means the management, there may be issues in the management of the organization. Maybe the direction, the way it is being managed, right? So profitability ratios is one of the way you could evaluate the financial health of the organization. So another one is the activity of the management ratios. It indicates a business ability to generate sales in relation to its total assets. Right? In other words, it measures how efficiently, how effectively you are managing your working capital. How manage your working capital. How many days you keep stocks in your hand. There are ways of evaluating this. Another one is the balance sheet ratios. It provides an indication of effective your investment is in the business. You can say the shareholders have invested a certain amount of money. What is the return they are getting? What is the return on assets that the organization has bought? So these things evaluate the financial health or the well-being of an organization. Right. Now we look at another aspect, the risk part of the organization. What is the risk and types of the risk? Risk is the possibility that actual results will turn out different from what is expected. We prepare budgets, we prepare objectives to achieve, but due to various reasons, the actual results will turn out different from what is expected. That is because of the risk. This is the possibility that actual results will turn out differently from what is expected. So we expect to achieve 100,000, but we may be ended up with 50,000 due to risk factor. So what are the types of risks that organizations face? One is the strategic risk. We discuss strategies that organizations adopting to achieve the desired objectives. If there is a weakness, if there's a fallback in the strategies adopted, the organization might fail. So that is called strategic risk. Same as operational or the process risk. The organization is performing. If the internal controls, if the organization is not sound enough, we have a risk of operational or process risk. Also a financial risk also. So you have reputation risk also. These are the types of risk that you could face, that you are facing while you are doing your business. So how you are going to overcome risk? So you can't eliminate risk. No, risk is anyway there. But there's a process of managing. Consists of identifying. Risk management consists of identifying, analyzing and managing all the existing and potential internal and external risks that could adversely affect the achievement of expected goals of the company. So it's a sort of a process of identifying, analyzing. First to identify what is the type of risk, then you analyze what is, go into details and analyze, and then you manage it, the risk. Right? So you can't eliminate the risk. All business decisions contains an element of risk. Therefore, analyzing and managing risk is an integral part of an organization to formulate its strategies to accomplish the desired objectives. decide to achieve the desired objectives, you got to manage the risk of the organization. Right? Risk management is a process of identifying, analyzing, and then managing. Let's discuss how we are going to respond to risk. Right? How we are going to respond to risk. So one is when you have a risk, he said that it's a process. How we are going to manage it. This is how we are going to manage. One is avoidance of the risk. If you feel there's a risk of doing certain activity, you stop that activity. You hold that activity that giving rise to the risk. So that is one way of managing risk. So you don't do. You are not entering into that risky area. You hold that activity. Then your risk is minimized. So number two, risk reductions. There's another way that you are facing the risk, you are responding, you are reducing the risk. You are taking certain actions to mitigate the risk. One is internal controls. Right? You can say you have a risk of certain activity, right? So you could have internal controls. That is why when an organization, when they purchase materials, there's a control that has to be checked by someone, it has to be certified by someone, finally it has to be approved. Sometimes a committee has to approve. When issuing goods from the stores, there needs to be a requisition that has to be approved by a divisional head. Then once it is received from the stores person, the manager or the storekeeper issue goods. At the time he issuing goods, he issue a good issue note and get the acknowledgement of the person who comes to collect the stocks. So which will be recorded. So these are internal controls. So there's a trail from the beginning of till to the end. So when you have proper internal controls of an organization, you can reduce the risk. Right? Remember, you can't eliminate it always. You can reduce the risk. Another way of responding is risk sharing or transferring. So you don't take the risk. You have the risk, but you share the risk. So you transfer it to someone else. So action taken to transfer a portion of risk. One is the insurance. You take certain insurance. If you take a building, you take fire insurance. Right? For your cash, you take cash in transit. If you are transferring cash, another insurance cover. Right? For equipment, you take another insurance cover. Why? In case something happens, you have shared your risk. You will be compensated by the insurer. Certain activities you are outsourcing. You are doing hedging also. For foreign currency, you agreed on a future date, future rate. So there are ways of sharing or transferring risk, right? So without doing any of the three factors highlighted, risk avoidance, risk reduction, or risk sharing, you can just accept the risk and do your businesses, right? But which is not recommended. Remember, all the three items, risk avoidance, risk reductions, and risk sharing, are well accepted ways of responding to risk. But if you are not doing anything and continue, you are highly vulnerable for risk. There may be certain activities which will, sometimes it will collapse your business. If you don't take insurance cover for the building, fire insurance cover, if there's a fire, the building is basically, because of the fire, the building will be over, you can't use it, right? So then you don't have a compensation. So you may not have money to build it again. Therefore, without taking any action, just accept a risk is not acceptable. So you have to take different responses. You need to take certain actions to manage your risk, right? With that, I think we got to stop the session. So I have highlighted you again, what is the financial statements, what are the components, what is accounting, how we are going to evaluate the well-being of the organization for the financial health, and how the strategies, how the mission and strategies linked to the link and be connected with the budgets and the financial statements. The risk area also we discussed. So by joining Colombo School of Business and Management, by participating in this program, you will be able to understand, and go into details what I discussed here today, what I presented here today. So I have been lecturing with these organizations for some time. These things we'll discuss in detail. We do certain exercises, right? So we do case studies. So end of the day, end of the course, you will be in a better position to understand the financial statements, because when you are non-professionals, non-financial professionals, any organization business language is accounting. You look at financial statement and you take decisions. So accounting, the main objective is providing economic information to the stakeholders to take decisions. So you take decision looking at the financial statements, right? So financial statements are prepared by the accountants. So remember, there's a difference between the financial accounting and financial management, right? Financial management, the process of, planning, organizing, and controlling all the financing activities of the organization. Right? So it may be having investment decisions, financial decisions, things like that. But accounting is preparation of financial statement for the stakeholders to take decisions. So you will, as non-financial professionals, you need to have an understanding of the financial statements. You don't need to be accountants. You don't need to be finance managers, but you need to be non-professional financiers or the managers of the organization who has the ability to understand the financial statements, who has the ability to read the financial statements, which will enhance your value addition to the organization end of the day. Right? Though you are not an accountant, if you can look at the finances, you can ask the right question. If you can contribute to the management discussions, you can contribute to the decision-making process effectively. Looking at the financials is where your success. People, non-financials, having a knowledge of going through the financial statements always perform better than others. Always perform better than others, because they know to go through the financial statement. They know to ask the right question. They know how to contribute, how to add value to the organization than other managers in the organization. So therefore, knowing financial is very important. So as a country, you look at what has happened to our country. We are not looking at our financials well. We have not taken any actions. We are not looking at the well-being of the country. Had we looked at it before, you could have taken corrective actions. Sometimes we knew it, but the authorities have not taken corrective actions. That is why we are in this sort of a situation right now, right? Therefore, you as non-financial professionals get an understanding of the financial statement. Get an understanding how to read the financial statement, how to go through the financial statement, right? And how you are going to evaluate the organization, right? Having a basic knowledge will definitely add value to you and will ensure that you will go up with the corporate ladder and you will have a successful future, right? So with that, I will wind up my presentation. Thank you very much once again, the management of Colombo School of Business Management, Ubudu and the team. Good evening to you all. Good night to all of you. Thanks.
Good evening. Thank you, sir.
Thank you. Thank you so much. Thank you.
Appreciate your actually fantastic session, Mr. Nalin De Silva. So we really enthusiasm is quite high, and also we got a really good knowledge from you as a starter program, which we just launched this evening. So thank you once again. We wish you all the very best for your future endeavors as well. to Mr. Nalin Disela. So we shall see you with the lectures as well. The lectures are going to start from next week, Thursday. And while he's here, actually, I would like to touch upon few things about this program, Finance for Non-Finance Professionals, which is the Executive Development Program, which comes under that category. You'll be getting a certificate as well. And all the people who's going to register with this program, and also there are people already registered, but you have another opportunity. If you're not registered, you can register yourself, because we don't get volume number of students. We only get a limited number of students, because we want to have a better way of engaging with our lecturers as well, for you all to get a better knowledge and skills as well. That's the best way to move forward on this particular subject, which is finance for non-finance professionals. So whoever not been registered, yes, still you got time till actually end of this week, you can register. And we're offering a special offer as well. And every student who's going to register with us, they get a student handbook as well. So student handbook gives all the details. I hope that I don't have to touch upon the CSBM we already discussed. And I just show a few things about the program, the modules, and also correctively, Mr. Nalin Disela actually explain about what are the objective out of this particular program, and especially purely high performance, making the right decisions as well by looking at finance statement and playing with numbers. And there are many areas basically you can achieve many milestones as well. And learning outcome also, I believe that he has covered actually distinction between accounting, finance, and there are many areas. And defining 4 key principles where finance statements, balance sheets, just snap it through with you all this evening. And interpret the financial health and condition, how these health and the condition are going to help us to make the decision-making process, which he has correctly explained to us actually. And demonstrate a range of methods, tools, ratios, techniques. There are many. So we can learn from those 6 modules as well. And prepare company operating badges. So based on that, how you can make optimization of profit, maybe controlling your certain budget elements to manage your cost factors as well. And also capital budget techniques, and also other required areas, cost, volume, profit analysis, and various things. So those are the things that we are expecting by end of the program. These are things that you're going to learn from this, learning objectives, learning outcomes. And there are 6 modules. And module number 1, introduction to accounting and finance. There are touch points, key elements, basic financial accounting, as correctly Ms. Nalin explained. And also financial accounting was a management accounting. There's a comparison just to give you a better way of understanding this particular area, because by knowing that, it's more easier for us to make the right decisions. That's what we want. This is I'm touching a few things. And module number 2 is analyzing and interpreting finance statement as well. So that's a key component of this particular module, which gives you quite a lot of healthy knowledge in this particular area, right? And understanding, evaluating income statement, balance sheet, and cash flow statement, how important to focus your cash flows, and horizontal and vertical analysis. There are particular technique where actually we'll discuss about that, many areas. And number 3, the module number 3 is cost information for decision making, very vital as well. And intro to basic cost concepts. There are many, and basic was overhead analysis, and also break-even analysis, CVP analysis, many areas. And quite interesting in this particular 3rd module, which mostly you will play with the cost information, where once you get the greater insight about that, the way of check the right health check on this particular area, where it will help you to make the right decision, right? And number 4 is the module number 4, budgeting and control. So which means you will be able to get it to making a right budget. And also once you do that, then you are in a really good situation to make sure that you do the right way of controlling that as well, to take your requirement forward to manage a profitable situation as well. And also prepare a realistic budget requirements. It's the most important thing as well. And comparing actual performance of budget, and also limitation of budgeting, alternative approaches to budgeting as well. And there are many classroom activities as well conducted by our resource people. And number 5, evaluating investment options. That's another very interesting module as well. So basically many areas where you get a better way of knowledge about that, way actually you will become a much more professional on this particular area for you to achieve your expected objective results as well. And Module number 6, once again, financing and investment and managing risks. That's a 6th module. So there are many touch points that I have highlighted on this, but I'm not going to go through because you'll be spending a lot of good quality time with all the resource people once you go through this program. And we are hoping to start the first lecture. Today we had a very entry level of lecture, which is conducted by Mr. Nalin Disila. That was absolutely free of charge for you to have a better understanding about how important this particular program. And when they're getting engagement with you, actually, as he said, actually they'll be having a lot of this kind of case studies as well, which related to the each and every subject I have explained to you on all 6 areas. Maybe sometime mostly they will take local case study as well as global case studies as when it comes to have a better way of interacting with our students as well. That way you all get a better idea about each and every particular area. That's how we focus on this particular program. Not only delivering lectures, we want everyone to get engaged with our lecturers, have a very debatable discussion, logical discussion, so that way you'll get a better knowledge and skills on this particular area to upgrade your required skills to achieve your performance, making decisions, achieving your revenue, controlling budgets, cost elements, and also managing your business as an entrepreneur. Could be entrepreneurs, startup owners, or people who work with the corporate sector as well, right? And also maybe by doing that, actually they can achieve their performance, revenues, and various requirements, and also they can obtain their promotions as well. There are many opportunities, right? Many opportunities. When the company sitting for the annual performance appraisal, there are many things they looked at about each and every employee as well. So that's why it is very key element of this particular program. And yes, I have actually already introduced Mr. Nalin Disila, who's one of the members of this lecturing panel and facilitators. There are many: Asangarana Singh, Ms. Sujan Senrathan, Rwanda Dimel, and also we have a calendar as well, the subject calendars we are delivering starting from, we started today, and the first lecture will be on 30th August, 1st September, like that, 6th September, and what's the module or what's the unit, and who's the person going to conduct each and every program. So the the sessions or lessons. And fully qualified, Ms. Nalin Disila, even Sujan Senaratna, and also, as I explained to you, Mr. Rwanda Dimel, Senior Manager for Business Consulting, Ernst & Young, and Mr. Sujan Senaratna, who's Head of Finance for actually Institute of Bankers of Sri Lanka as well. So after completing this particular program, actually we are awarding a certificate as well, which is a very valuable certificate, which comes from Colombo School of Business and Management, and also other benefit that you're going to obtain through this particular program. Whenever you want to engage and talk to lecturers regarding your finance and accounting requirements, they are more or less, we really want to support you all. You can keep in touch with them. You can call them, you can email, and they will respond. So that's how we have developed this particular program. So as I explained to you before, not only theory, not only certain modules, not only concept, techniques, frameworks, which relate to finance and accounting. And also our turning point is you get quite a lot of up-to-date information will relate to the finance accounting from our 3 superb lecturers, and case studies, discussions, and also they will guide you how effectively you can take forward your business as a business leader, or if you're working for an organization, or if you're willing to set up your own business as well. Entrepreneurs, startup owners, and business leaders, even the undergraduates and the employees who work with the both sectors, corporate, public sector. So actually, and I believe actually now time is 18 past 8 o'clock. So we have had a fantastic evening with Mr. Nalin Disila. And people who have not registered, we are encouraging, please register. You have time till end of this month, end of this week, till Friday. Still, we can offer you a special discount, right? Special discount what we're offering, because since you all have taken part tonight program, so therefore you are eligible for 5,000 rupees off from your investment, right? 5,000 rupees off from your investment. Your investment is actually, our investment was 27,500. And first discount due to the current context of the economical situation, we have given 2,500, which brought it down 25,000. And since you've been registered tonight for this particular program, we can offer you further discount of 5,000 rupees, where you only pay 20,000 rupees for the entire program. So we'll be running this program for 20 hours, Tuesday, Thursday, 7 p.m. to 9 p.m. onwards. And also, in case if you're going to miss any recordings, we should be able to give you if you miss any lectures due to your requirement, various other factors, and we shall be able to give you recording as well. We don't charge, absolutely free of charge, as we can assist you. So to get further details, to register yourself, please call us on 0703676767. Once again, I'll repeat that number, 0703676767. Either you can call or you can WhatsApp. So there's a happy hour tomorrow from 10 a.m. to 11 a.m. You can send your request through WhatsApp or you can call that number. We are more than happy to guide you, assist you, and offer you one of the best offer in the town. And once again, thank you very much. So we wish you all the very best. Have a wonderful, pleasant evening, and have a great new week as well. So don't forget, our first lecture going to be next week, Tuesday at 7 p.m. through Zoom. So please register once again, be hurry and obtain your special offer and discount. And good luck. All the very best to you all, and bye from CSBM. God bless you all. Good night. Take care, yourself. All the very best to you.
Thank you very much.
Thank you so much, Bodu. Thank you. Good night.
Thank you so much. God bless you.